So what it is, YouTube? It's your boy Don't Play Trent, checking in live from the lab. Back at it again with another video here on the little account, where I teach you guys tips and tricks on how to grow a little account into a big deal. So without further ado, y'all already know we like to go ahead and jump straight into it. This particular video today I wanted to drop was on order types. I wanted to talk about the different order types, the different ways you can actually enter the market. I feel like, you know, for the newbies out there, the beginners that are still having some confusion on how to actually enter the market or execute in the market, this video is for you. So stay tuned, watch the whole video. I'm going to show you guys exactly the 5 different ways you can enter the Forex market. So like 5 different ways that you can enter the Forex market. So like I said, we're going to go ahead and jump straight into it. We're going to keep this short and sweet. Let's get on the charts. Alright, so let's talk about the most effective, if not the most easiest order type, which is going to be market execution. So let's first start with order types. So what are the 5 different order types? 5 different order types. And basically, this means there are 5 different ways that you can actually execute a trade or actually enter the market. 5 different ways. So, the first one, number 1, it's going to be market execution. I believe that's how you spell it. If not, don't mind me. I don't see nothing red under it. Anyway. Y'all forgive me, I cannot spell, but I can count. Market execution is the first one. Second one is known as a buy stop. The third one is known as a buy limit. The fourth one is known as sell stop. And the fifth one, of course, is known as sell limit. Okay, so what exactly this means? So, whenever we are entering a trade, whenever we're entering the market, there's only 5 different ways that we can enter the market. Market execution, buy limit, sell limit, excuse me, buy stops or sell stops. So, what exactly does that mean? Whenever I am entering a trade, majority of the time, I'm usually entering a market execution order. Excuse me again. Market execution order. Basically, if I'm at the charts, if I'm on the laptop at the charts live trading, majority of the time I'm going to be entering a market execution order. Unless I'm trying to get in at a particular price point, then I will put in a limit order or a stop order, right? But majority of the time, like I said, most of the time, if I'm right in front of the screen, I'm going to be entering a market execution. I feel like limit orders and stop orders is position or orders that you put when you are not at the laptop or you're not in front of your computer. Let's say if you have to work or if you've got to catch a flight and price is near your area of range and you feel like price is going to go in this area, in this direction, let me go ahead and put in a limit order, a stop order, just in case I am away from my phone, away from my computer, the market is still going to enter me into the trade. So, I'm going to show you actually live on a demo account that I have created on Trade Locker. So, we're going to start with the first one, market execution. So, this is Trade Locker. Like I said, this is one of my demo accounts. Just for the hell of it, we're going to go ahead and enter a market execution order. So, right here to the right hand side, we can see we have either a market order, a market order, or we can do a pending order. So like I said, market order, basically this is me live right now on the charts. I'm looking for a setup, and just for the hell of it, let's go ahead and do a $2 lot size. So I'm gonna go ahead and put in a $2 lot size, and then I'm gonna hit buy. Right, let's say if I was actually getting ready to buy into the market, we can see that the green arrow, which I don't know why this is up there. I really don't like that. Where is the setting? So let's take that off. Trades on charts, no. I don't like looking at that, the arrows. But anyway, we can see down here is the actual order that we entered. So we're currently into the trade now, down about $2, which is probably the spread or whatever. But essentially, this is market execution. Very easy, simple, and sweet. You know, if I'm actively on the charts trading, if I'm actively, you know, looking at my laptop or my phone, and I see I'm getting ready to take a trade, getting ready to take an entry, I'm going to, you know, hit market execution. Basically, I'm going to buy or sell right at that price point. So let's talk about the other ones, the ones that are probably a little bit more confusing for some folks. Buy stop, buy limit, sell stops, and sell limits. And I actually have an image here that I want you guys to see. And this is just basically a sum it up in a nutshell of what exactly these order types mean. So a buy stop, order placed above price, and price keeps going up. Buy limit, order placed below price, then price goes up. Sell stop, order placed below price, and price keeps going down. Sell limit, order placed above price, and price then goes down. So this may not make sense for some people just reading it like this. So I'm actually going to show you on the charts and enter a trade using these different examples. So let's talk about a buy stop first. And let's see here. So a buy stop or sell stop. Which one should I do? Actually, let's go into TradeZilla. Let's go to our back testing feature. And let's go to play. So I'm just going to play one of my most recent back testing. That way I can review, or at least do the replay option. So let's do the replay option and delete some stuff. And let's remove everything. So let's talk about the first one, which is actually let's drop to a lower time frame. And let's talk about a buy stop. Damn, excuse me, I cannot shake this, whatever it is, but I damn sure need to. So let's talk about this setup here, in a sense. Let's just say we were waiting for price to break the trend line. Once price broke the trend line, let's back up some. So let's just say, hypothetically speaking, that this was our trade setup, right? We're waiting for price to break the trend line. Once price breaks the trend line, and let's say price breaks this structure area, we will then enter the trade. So if I'm realistically looking at this live, let's get right here on the open of that sell candle, put it at our nearest quarter point, which will be 161.375. If you guys need help with quarter points, please go watch my quarter point video so I can show you exactly why we always want to have all of our price points at a quarter point. But like I said, that is on another video that you guys can scroll and go look at. So this is my setup here. And remember, let's say we were entering a buy stop, order placed below price, and then price keeps going up. So in an instant like this, let's drop to a lower time frame. Basically, what this means is, if I'm looking at this live, what time is it on this screen? So this is basically Friday, February 17th, 2023. Right? Let's just say we were back in time and I was looking at this live and I said, hey, I'm about to enter this trade. Price has broken my trend line. Price is starting to make higher highs and higher lows. Price is starting to uptrend. If price can break this area, then I'm going to actually execute the trade. So this would be my trade here. Let's say I got my typical stop loss, which is about 20 pips. So somewhere in here, and let's just say I'm doing a 1 to 2, so I'm trying to get 40 pips, right? So basically, if I'm putting in a buy stop, I am basically saying or telling the charts that once price gets to this area, 161.375, enter me into this enter me in at this price point for a buy, and I am wanting price to continue to go up. So if I was actually entering this trade live, this is GBP JPY. So let's go back to Trade Locker. Let's find GJ. Like I said, this is all hypothetically speaking. This is just using an example. If I was actually entering this trade on GJ and I'm looking at this trade live, like I said, it would have been currently 8 in the morning. So if it's 8 in the morning, price is yet to reach this level. So we have to put price, your order is being placed above price. And this is exactly what this means. This is my order here. I'm looking for a buy at 161.375. So I'm going to enter this exact price point. So I'm going to go to a pending order. I'm going to hit buy. I'm going to change the price to 161.375. So the price point that I would like to get in it is 161.375 is my price point. And that is simply because this is where I would like to enter at, right here at my yellow line. And let's just say my stop loss was here, right? At 161.175 stop loss. And let's label that stop loss. So we have our stop loss labeled, and let's also label our take profit, which is here. And you notice that all of my lines, anytime I'm ever plotting any lines on my charts, I'm always fixing them, making them at a quarter point, unless the candles say otherwise. But majority of the time, I'm usually, anytime you look at my screen, look at my charts, all of my levels or all of my lines will be at an even number. It's going to be at a quarter point majority of the time. Like I said, every now and again, depending on the candles, depending on what the charts say, I have it a few pips off or a few pips away from a quarter point. But anyway, this is our take profit. So we have our stop loss and we have our take profit, right? So our price point is 161.375, which we have here. And then our stop loss is 161.175. So in this particular instance, I'm going to hit stop loss, type in the price, 161.175. Yep, 161.175, or simply I could just put 200 ticks, which roughly is about 20 pips. So about 20 pips, and then my TP is 161.775. So take profit, 161.775. Boom. I will then hit buy limit. So at this point, this is me entering the trade before price even gets here. So this is basically now a pending trade. This is sitting in the vault. If price never hits this, level, order never gets activated, right? But let's run the play. And as we can see here, in this particular instance, price pretty much shot straight up and then came right back down. So in an instance like this order would have been executed right here at this very spot. However, price immediately came right back down. So I would have lost this particular trade. And then if I would have still had the confidence to get back in to, follow my analysis, I could have re-entered the trade here, either for a market execution order or a buy limit order, which leads me to my next order type, buy limit. So we just talked about buy stops. Basically, price is below, and then we are looking to place our order above price. Essentially, we were wanting price to keep going up. So that's what a buy stop is. Price is below, you're placing your order above price, anticipating price to continue to go up, right? So let's talk about the second one, which is, where did I have it at? Buy limits. So let's talk about a buy limits. Buy limits are mainly for retest traders. So if you're a retest traders, buy limits is probably your favorite order types, or sell limits are probably your favorite order types, because your job is to wait for price to come back. So order types, buy limits a little different from buy stops, and basically, I am wanting price to come up. Let's first change this back to white, and let's change our dotted lines. So I am waiting for price to break this level, which it finally does here. Once price breaks this level, price is now above my order. And this is what it talks about when it says buy limit, order placed below price, and price then goes up. So excuse me, I said that wrong. Price has to be above your order. And our job, or we are anticipating for price to come back down, to retest this area, to then go up, right? So this is the whole purpose of a buy limit. Price is here. This is price. Hypothetically speaking, this is where price is currently at. Let's change this to a different color. So essentially, let's just say this was price, right? Price was somewhere up in here. Even though price is right here, let's just say, let's go to the next candle. Okay, here. So this is price currently, right? I am anticipating, or I would like for price to come back down here and put me in for an entry. So if I'm looking at this live, I would then go to my charts, or my platform. I'm then going to go to pending order. My price point is still going to be the same exact price. So my price point wouldn't change. In this particular example, my price point wouldn't change because I'm entering at the same area, right? So my same price point will be 161.375. The only difference is price is now up here. I am anticipating or hoping that price comes back down. If price does come back down, I am looking for a rejection. I'm looking for price to go back up. So the whole purpose and goal of a buy limit is for you to take the retest. Price comes back down, enters me in here. So let's write entry. So this would be my entry. And again, my stop loss will be the same. My take profit will be the same. Nothing changes as far as price. It's just timing, you know. If price was here, I'm going to put in a buy stop, anticipating price to continue to go up. Let's just say price is already broke. I just woke up. I was asleep. I just got off the plane whatsoever. Who knows? And price is already running. You know, a smart, educated trader is not going to buy up here. You're buying too high, right? So we want to wait for price to get cheap again. Once price gets cheap, then we buy. So let's just say, you know, we're not going to be in front of our laptop. We have a plane to catch, whatever the case may be. I am then going to get on my phone, get on my chart. I'm going to say, hey, price is not at my current level, hypothetically speaking. If price does come back down here, I want to be ready. I don't want to miss this. I don't want to miss my entry because I'm away from my phone. I'm away from my laptop, whatever the case is. So I'm then going to put in a pending order, which is going to be a buy limit. I'm then going to set my entry here, anticipating price to come back down. If price doesn't come back down, I won't enter the trade. However, I am going to be satisfied because I didn't chase the trade. The goal is to not chase the trade, right? Let the trade come to you. If price does come back down, I'll be ready for price. Even if I'm not looking at my computer, looking at my laptop, the market is still going to automatically enter me in for this particular trade. I'm risking 20 pips to get 40 pips. So this is essentially what a buy limit is. We just talked about buy stops. This is a buy limit. Buy stops, price needs to be below. You're anticipating for price to keep going up. And buy limit, you are anticipating price to retest. Price to come back down to then go up. So, simple, easy enough. Pretty much, let's talk about sell stops and sell limits. Pretty much the same exact thing. It's just, you know, flip flops. For sell stop, we are anticipating price to keep dropping. For sell limit, we are looking for a retest. So we are looking for price to come back up. Retest our resistance zone or rejection area to then continue to keep going down. So I'm going to show you on the chart to give you guys another example of a sell limit. So let's just say something like this. Okay, so let's delete this. Why aren't we deleting? Did we delete? I believe we did. Okay. So, in an instance like this, we're going to enter a sell stop. Basically, if price, hypothetically speaking, let's just say price is here, right? I am waiting on price to break this level. Let's just say we're in a downtrend. We're in a downtrend. I want to continue in with the trend. I have to wait for structure to be broken, right? Once structure is broken, then I'll enter the trade. Let's just say, though, it is currently 10 a.m. in the morning. I just woke up, or I'm not at my computer at the moment, and I don't want to miss my move, right? I don't want to miss my trade. So I'm going to enter a sell stop. And this is what my sell stop will look like. So let's just say I'm, again, same risk reward, risk ratio, risking 20 pips for about 40 pips. Basically, if and when price breaks this area here, this is my most recent low or structure point. If price breaks this structure, I would like to automatically be put in for a 1 to 2 risk reward ratio, right? So let's just say our entry price is here, right here at the quarter point. 160.850 is going to be our entry price, and sell stop, our stop loss this is our stop loss. Make this red. Let's actually make this at this so we don't have to keep writing that. Stop loss, right? So this is our stop loss. This is our entry price. Let's make that entry price. Let's also make that yellow, a little bit brighter. And then our TP, of course, will be down here. So if I'm manually entering this in, this is what it will look like. It's 10 o'clock in the morning. Price is not pretty much where I want it to be. Price is a little high at the moment. In this instance, price is a little low because I want to buy low and sell high. Did I say that right? I don't know. Anyway, at this moment, I'm not comfortable with selling here. I'm not comfortable selling at this spot. I would like to sell once price breaks this structure. So this is what I'm be waiting for as a trader. Hey, this doesn't look like a very good spot to enter. So if and when price comes to this area, this is where I would like to get in. So I will go back to my platform. My pending order would be 160.850 is my price point. So that's my entry price will be here. I literally just forgot the number. 160.850. Okay, 160.850 would be my price point. My stop loss would be 161.050. 161.050. And TP is going to be 160.450. 60.450, right? 160. I'm actually going to enter sell 160. Okay, so 60. Okay, and if you entered everything correctly, price will give you the option to hit sell. If it doesn't, like if it's blanked out or something like this, that means something is wrong. You have an error somewhere as far as your price point, so you need to fix your price points as far as maybe you're looking at it wrong, or maybe you mistakenly hit buy, you should be selling, or you hit sell, you actually should be buying. So if it's grayed out, basically you did something wrong. Your price points are off. So that is my alarm. So with that being said, that is a sell stop, and price comes back down. and at this moment is where price would actually enter me the trade. So I've actually manually put the trade in at 10 a.m. but my entry didn't get executed until 12 p.m. So this is the whole point in reasoning when it comes to actually executing a trade. Okay, perfect. So we went ahead and talked about sell stops. Like I said, we would have been actually entered this trade here. Our trade will be executed, and price looks like it gets near our TP, but does it actually touch? And this particular trade, we would have actually lost. Barely, but a loss is a loss, right? Nobody cares about second place or losing profit. In this particular trade, it actually came about, looks like 1 pip away from actually executing our entry order. Executing our TP order. And price reversed and came back up and tapped our stop loss. So, as a trader, you gotta hate trades like these, but this is just one of those things to where, you're just following your rules. Even if you're watching this live and you actually see you're in profit, for the people that takes profit early, obviously it would have worked out in their favor. But if you wouldn't have, in a situation like this, if you did not take profit manually, the TP order would not been executed, and the stop order, because it actually hit the stop loss price, the stop loss would have got executed, even though you were 1 pip away from your TP. Sometimes in trading it just happens where you're 1, 2, 3 pips away, price reverses completely, goes in the other direction, hits your stop loss, and those are the days you just have to roll with the punches. So, talked about sell stops, sell limits, pretty much the same exact thing, flip flop. Let's get a good example of a nice sell stop. So let's say something like this, right? Where price is below. Let's delete some of these stuff. So this is our most recent resistance in an area like this, but price isn't quite there yet. And it is, let's just say 4 o'clock in the morning. Price isn't quite there at this resistance level, which is our QP at 161.450. And let's just have this as a daily resistance. Let's just hypothetically make this a resistance level. So 4 in the morning, price isn't currently at my daily resistance level. Like I said, hypothetically speaking, this is a daily resistance, but I'm waiting for price to get here to then come back down. So I believe price is going to continue to keep dropping, right? This would be my intentions. I would want price to continue to drop, and let's just say I'm targeting this area here. So I can actually enter it here. So I'll show you guys, instead of going back to Trade Locker, because I don't want to actually enter some old data into Trade Locker. I'll enter it here. So in a situation like this, let's just say I have a $1 lot size. This is my limit order, right? Because I'm entering a sell limit. In a sense, I want price to come to this area to then come back down. So like I said, majority of the time whenever you're entering a sell limit or buy limits, it's usually because you're not in front of your laptop, not in front of your computer, or you want that exact price point. So me, I'm very tedious when it comes to my price point. I like my price to be at my price, because majority of the time, which is something I forgot to mention when you're entering market execution order. So which I'll get back to that. I'll bring that back up. Let's just talk about this, and then I'll give you my little tip when it comes to entering market execution orders. Why I prefer, sometimes even if I'm sitting right in front of my computer, even if I'm sitting, trading live, sometimes I still enter buy limits and sell stops, just because I like my price point at my particular price point. But back to this example. So this is my limit order here. My price point is 161.450. So entry price is 161.450, which is my daily resistance. This is where I would like to actually execute the trade or enter the trade. Who is calling me? My profit target is going to be somewhere down here. Let's just say at the 160.850. This is our TP area, and our stop loss area is up here, 161.650. Right? So stop loss is up here, TP is up here, and then we would actually enter the trade. Now notice, open positions, there's nothing there because this trade hasn't been activated yet. So this is now a pending order. This is now put back into the back, put in the vault, waiting to see if price gets to these price points. If and when price gets there, at only that time, price will then be executed. So let's run the play. Price limit order is executed. You can see, actually you guys can't see, but yeah, it says limit order was now executed. And let's go down to the bottom. And you can see now where the order has been executed. The limit order is executed, and let's run the play. And at this point, I am now $14 into profit. Let's run the play. I'm now $38 into profit. And profit target has been executed. And you can see the trade is no longer there. The trade has been closed out. And for that particular trade, which is the most recent one, the 16th, so somewhere, I think this one here, and it was about $45 on that trade. So about 60s. Is this the trade? Sell at 516. Yes. So this is it here. This is the one that we just entered, and it's about $45. Even though we caught about 60 pips, we only took away about $45, including fees and other things. But realistically, including the fees and the spread, everything else being calculated, we made about $45 on this particular trade, right? So that is initially order types in a nutshell. So back to the market execution. Back to my market execution tip that I forgot to mention in the beginning of the video. Whenever you're entering market execution orders and you're looking to get in at that particular price point, let's just say I'm looking to get in at 161.850. I'm looking at it live. I'm right in front of the screen, and it's at 161.850, and I hit market execution, and all of a sudden, instead of it entering me in at 850, it entered me in at 750. And I'm like, what the hell's going on? Because you have to factor in fees. You have to factor in fees and the spread. So whenever you are entering a market execution order, it's majority of the time never going to be at that exact price point that you're looking at, because one, the market is fluctuating 24/7. Up and down, in 10 seconds it can do 20 or 30 pips easily, you know what I mean? So the market is fluctuating at all times. So even in the moment of you actually hitting sell or hitting buy, price has already been moved, to a whole new price point. So like I said, when you're entering market execution orders, be aware of the spread and the fees. So when you actually think you're entering in at 850 and you look back at your entry point, it got you in at 750, and you're like, damn, I'm 10 pips away from my actual entry, because the market has factored in all of the extra fees. So this is why I said I usually like to enter sell stops and limit orders and buy and stop orders, because I would like to get in at that exact price point. So when you're entering these limit orders or buy orders, even though it's going to take the spread again anyway, but it's still going to have you very close to your initial price point. And especially if you're a scalper, or if you're trading on the lower time frames, or you're trying to get a good entry, price is everything. When 850 means 850, not 875, not 860, but I like to be 850 or 851 type of trade. You know what I mean? 852, no more than a couple micro pips away from my actual entry. So I recommend, like I said, if you're in front of the charts, using the buy limits and stop orders, just because it gives you a more accurate price point. If you're using the market execution order, yes, you're live, but just understand, once you actually enter that trade, it may be a couple pips away from where you thought you was, just because the market has factored in everything else. So again, it is Don't Play Trent. This video was not meant to be long. Just wanted to drop some gems on the order types and how we actually enter the market. So like I said, 5 different ways when it comes to entering the market. If you found any value to this video, or if this video helped you in any kind of way, please hit that like button. Please show your boys some love. Do not forget to subscribe. For my boys and girls that are already subscribed, hit that bell notification so you guys can get updated on videos like this. So again, it's your boy Don't Play Trent. I am checking out, and I will see y'all on the next video.